So-called payday loans, short-term loans with high rates of interest, have proliferated here in New Mexico, and advocates cite what they say are lax laws that make the state attractive for such lenders. The industry relies on repeat loans, critics say, and some 75% of borrowers in the state end up rolling over their loans if they can't pay on time. That's a big problem. That's according to the New Mexico Fair Lending Coalition. That leads to astronomical interest rates that have reached over 1,000% in some cases. Advocates say they will push for an interest rate cap of 36% in the next legislative session. Many other states have such a cap, and a poll found overwhelming support for that here. But previous efforts to pass tougher laws have failed. Dee Dee, you know, you've been up there, you've watched this happen year after year when you were there. The simple question is, we know there's lobby money up there, we know there's a lot of activity up there, but even still, why can we not get these interest rates lower in the legislature? What's the block here to getting a vote on this?
Well, there have been votes on it, and we did pass a law in 2007 that did regulate payday lending. But what happened was then the companies just called their loans something else, title loans or signature loans or something like that. But don't underestimate the payday lending lobby, which includes some of the best lobbyists, former leadership of the House, and also this year I think they gave $97,000 to candidates. Now, the Attorney General has been a real champion in this case. Karen Myers of the Consumer Protection Division has been working this now for at least 4 or 5 years. And even the Attorney General's office with senators who have been willing to filibuster on this action, the Lieutenant Governor who was a proponent of caps on loans, and the law we did pass forbid rollovers, which is a big problem there. But even then, we still are in like a loan sharking environment because we do have no usury law here. What we passed is not a usury law. So the courts have been the ones that have come in to enact this 36% cap. We'll see whether anyone wants to vote for a higher cap.
Interesting, please.
But you know, at some point you've got to ask the basic question, why do we have this market? And when I was surveying, I said, why would people do this? And we don't talk very much about the unbanked. I was amazed when I was sitting in one of the offices, because I went and sat, and there were people whose jobs simply do not permit them to go to a bank, and they use it as a bank account. And so is the problem that we have a market? Is the problem someplace else? And I'm wondering if our banking institution shouldn't be stepping up, because we have this large unbanked population. Now, that notwithstanding, if you go to the reservations, they have a great distrust for banks. So we have this pawn industry because we have this unbanked population.
Yeah, it's really something. On the 36%, it's interesting to me how, if it passes, let's kind of think ahead a little bit, it's like, woo-hoo, like 36% is good or something. You know what I mean? That's a pretty high interest rate, but it beats the heck out of 400%.
If you got that in a credit card offer, you'd be pretty sad, and you'd be checking your credit.
Exactly.
But what we see here, I think, is really interesting to Dee Dee's point about the lobbyists, is that we don't see, well, we hear lobbyists for the industry saying, listen, this is really necessary for people who are unbanked, who have lower incomes, et cetera, who need the money to get them over, rent day or whatever. We don't see advocacy groups that work directly with lower income individuals saying, we need this. We see the opposite. We see those groups, for the most part, saying we need better lending from our banks, we need better pay for our employees, not putting the same kind of pressure. And I realize, I see your face, Dee Dee, that you're thinking of
Prosperity Works.
Yes.
Sure.
I would say
Prosperity Works encouraging savings among low-income populations.
Well, and we worked so hard to try to get individual asset accounts, and it was like we had stepped on a landmine. And so there is another problem here that we still don't have our finger on it. It's really awful to know that there are people who get caught in this. But I have to say, why is this still happening? Is it lack of financial literacy?
And
Ona
that's
Porter
exactly
would
what it is.
exactly say that that's it.
Yeah. I mean, we have seen time after time on different topics, whether it's talking about tuition and, loans, student loans failure rates in New Mexico, but it really comes down to financial literacy. And, I'm not convinced as a result of our conversation here that financial literacy is something that is really being reinforced in our high schools. As a part of a graduation requirement, it needs to be part of
And to add to that, when the court looks at, because you've brought up, Dee Dee, the issue of the court creating this cap through a statement that a ruling basically that the fee is unconscionable. When the court looks at a loan contract and says this is unconscionable, they look at two things. One is they look at whether there is a true benefit to one party. There needs to be a balance of benefits between the party, to put it sort of simply. The other is the financial or sort of contractual sophistication of the party that's harmed. And so when you say, we need more financial literacy, yes, but there is also this sense that there are many people in our community who are not financially sophisticated or not sophisticated about the contracts they're dealing with. And the contracts, I've got to say, are often written so that even attorneys, and I've seen them, even attorneys say, I'm not 100% sure what this says. And that is deliberate on the part of the lender. I want to put this out here because this really doesn't get talked about much. These companies in different form are also preying on New Mexico's small businesses.
That's right.
With small business loans that are insanely high, and there's no real regulation there. And the other thing is they're very good at disguising them as other things in order to avoid business bankruptcy, usury limits, et cetera. It's not just people, it's also harming our economic engine, our small businesses.
So can I ask, if we're able to cap this and say we drive out all of the current businesses, do we then create an open territory for loan sharks? I think that's one of the things we've discussed in the legislature, but there is clearly there is a market, there is a need.
I think we already have open territory for loan sharks.
Oh, okay. That's what we have.
There's an interesting point there. I was interested in the editorial that was written by our former taxation in Rev head, Mr. Minsner. I always get his name wrong. He made an interesting point in his op-ed saying, you know what? If everyone is convinced that you can make money at 36%, someone needs to prove it. Someone needs to open a business at around that range of percentage, see if the customers come in, and see if the marketplace responds, and put these other people out of business the old-fashioned way by having better rates. Does that seem reasonable to you, Tom, that at some point a market case has to be proven?
Well, at what cost? That's the big issue.
Right.
Is at what cost is this market case going to be proven?
Sure.
There are so many different variables here, but I think that the first step is really setting that cap at 36%.
Right.
Or whatever that cap is. Let's just get control of it. Let's use open language to go ahead and make sure that they can't change the names like they did after the 2007 legislation was passed.
I'd like to see an understanding that sometimes interest is expressed as a fee, sometimes it's expressed as a cost, and that needs to be brought in as well, because I think that's part of the slipperiness.
And so part of this, and maybe these predator lenders can be a part of this solution, because I don't think we're going to be successful, unfortunately. I'd love to think that we could, but they're not going to be going away anytime soon, I don't think. And get them to be part of the solution. Let's come up with some standardized contracts that they could use, perhaps, and let's tell people what to look for. So before they sign on the dotted line, they actually know what 1,000% interest really is.
I find it interesting that the studies have shown that for every dollar that walks into a storefront of these places, 24 cents of it leaves the state. It's unconscionable for you. It's like a cancer on our state. It's just really terrible. Now, coming up, we get an update on the fires and floods that have devastated Santa Clara Pueblo.